Okay, good evening, everyone.
Good evening.
Okay. I'm a bit nervous, but okay, relax.
Hey, he wears suit, is he?
I was meeting some other clients. Okay, so how many of you want to achieve 19% ROI in your investments? How many of you all have already started investing already?
Hey, see?
Oh, not as many. How many of you have not started investing yet?
They scared to raise up.
Okay, don't worry, I was one of you guys. Okay, so my name is Geraint, and I am a financial strategist with IAM Advisory, which is stands for Integrated Asset Management, where we help to optimize and strategize our clients' financial portfolios. Okay, so basically this is what I'll go through today. Some introduction about myself, how I got started, my investment philosophy, my 5 steps capital allocation method, and some of my trades, which you will see how I actually generated my 19% ROI, and the Q&A session. Okay? So yeah, my introduction, I just graduated from RMIT, here, Econs and Finance, yes. And I used to be from the SIM Investment and Networking Club. So I'm not here to brag and boast about my achievements, okay? I'm just here to assure you guys that what Cayden has taught us, right, is actually very valuable. Because this, right, what Cayden is actually teaching us, right, is fundamental analysis, right, used by those top fund managers and those analysts, as well as investment bankers in the financial sector, and it's taught in schools as well. Okay. So don't have to be afraid of Cayden that he's like a scam or what. Okay. Because before, right, I was like one of you guys, about 2 years ago in the army. Okay. Yeah, I was very skeptical of Cayden.
Me specifically.
Yes, the whole course. But before that, I read a lot of books about investing because I wanted to be financially free. That was when I was in the army about 2 years ago. Okay, so I read a lot of books. Then I found Cayden's Facebook page. That's why I enrolled myself into the preview session. Then I saw him how he spoke. I could sense he was trying to build some trust with his story and all that. Okay, but no issue. I took a leap of faith and I attended his course. So I was in batch 23, and this was me here, if you can see. And my girlfriend is here. Yeah, I managed to convince her.
Marry you?
No. Not yet. Okay, so after the course, right, I was still very not confident. I didn't know how to start. Okay, so I went for Cayden's coaching first, to be a coach for the volunteer to be a coach. Then I signed up for his partners program and referred some of my friends to him. Yeah. So how did I actually get started? After the course, right, I know I learned so much already, but I didn't know how to apply. I was very scared of losing my money, okay? Because I in the army, right, I used to do a lot of binary options, a lot of trading. But then I sort of lost all my money, about $1,000. Lucky it's paper money only, okay? So how did I actually get started? It's actually very simple. Just follow the simplest method, which is this STI ETF. Has anyone started investing in this? Okay, it's only $100 a month. You just poke some button in the iBanking there, then they can invest with you. Yeah. So I'm quite a risk-averse investor who feels that they are risk-averse. That means very scared of losing money. Yeah, same thing. Okay. Okay, yeah. Initially, I was in the army also, so I wasn't earning that much. So my capital was very low, so this is how I just got started. So my investment philosophy is very simple. Um, it is exactly the same as Warren Buffett and Cayden's philosophy. Okay, is this particular philosophy that I follow very strictly. Okay, which is be fearful when others are greedy, and greedy when others are fearful. Okay, this particular message, right, it can earn you a lot of money if you just apply this method. Okay, so before I make any move, right, that means before I make any buy or sell trade, right, I will look at the financials first. Okay, the three financial statements: the balance sheet, the cash flow statement, income statement. Then after that, I'll look at the ratios. And then I will use the VIA calculator and calculate the intrinsic value. Basically, if you all didn't know, right, the VIA calculator is actually using the discounted cash flow model. This model, right, is actually very widely used in the financial industry. And what Cayden is teaching is a very good thing. Okay. So yeah, after that, I'll look at the company news, see whether I make sure I must understand business model first, how they actually make money. Yeah. And whether there are any expansion plans or any growth in the company. Okay. For example, I'll see if there's any new product launches, whether they're going to launch in other overseas markets or anything. Then after that, I'll read the news, the market news, like the interest rate hikes, the oil price and all that. Okay, so as you can see, this is a very bottom-top approach. Bottom-top approach. Okay. So when do I buy and sell? Basically, it's very simple. You just follow Cayden. Okay. You look for positive and growing financials, positive ratios, and basically just try and filter all the stocks using FinVis and the SGX. After that, calculate your intrinsic value using the VIA calculator. You know, even after I learned a lot of those financial valuation methods, all those taught in schools, the dividend growth model, what DDM, DCF, all the funny thing, all relative valuation. I'm still using Cayden's model. Because Cayden, right, his Excel sheet, right, he simplified all the math, everything into one specific. Just put in the number can already. You don't even do all the math. Yeah. Okay. After that, you have to understand the business model. Make sure it is in your circle of competence. Okay. This expansion plans part, right, is what I specifically look for every time when I want to buy a stock. Okay. This is very, very important because it will help you to project the revenue growth rate, the income growth rate, and all that. And after that, I'll look at the market news. I'll see whether if there's any negative news that negatively affects the stock price. So if it does, right, it is actually a good thing for you. Okay, but you have to make sure the news, right, doesn't directly impact the business. For example, let's say you want to invest in BreadTalk, right? But the news says that the Fed rate is going to increase their interest rates. Okay, you know that it doesn't really affect BreadTalk directly. So that is a small opportunity you can buy for BreadTalk. Yeah. Then sometimes you have to gauge on your gut. You have to base on your gut to gauge whether the business will be able to tide through all the bad news. So when do I sell? Basically the opposite of when do I buy. Okay, so negative declining financials, declining ratios, meaning your PE ratio or the price to sales ratio, price to book value ratio. Make sure your market price, right, as long as your market price is above your intrinsic value, right, you can sell already. Okay. It seems very easy, but when the emotions start to get in, right, it is really not easy at all. Yeah. When do I sell for company news, right? If the company news is, for example, key management leave the company. Example, the Steve Jobs, right? He passed away, ma. So immediately, it affected the stock price because it affected the whole business. The innovation part of the Apple, right? It went down. Yeah. So some of these really matters, okay? Yeah. After that, you have to look at also the market news. Make sure the negative news, right? If the negative news directly impacts the business, make sure you sell, okay? That's all. So this 5 steps capital allocation method, right? To be honest, I forgot where I learned this from, okay? But I've learned this from, if I could remember, it's either from Warren Buffett or Phil Town or Peter Lynch. It's either one of his books, okay? So this is not something I came up with myself. So how you did this, right? Basically, I think you would want to take a picture for the 5 steps. Okay, because I don't have the consolidation part. So my first step, right, is to have one portfolio. And since Cayden only taught me how to invest in Singapore and US stocks, right, we divide it by half. Half Singapore, half US. Okay? So 5 US stock, 5 SG stock. Then make sure one company stock, right, don't exceed more than 10% of your portfolio. This one by right should be 10%. So, for example, right, let's say if my portfolio is $10,000, $10,000 divided by 10 stocks is $1,000 for one stock. So you allocate one company shares, right, for $1,000. The reason why you have to do this, right, is so that it is properly diversified. It is well diversified, okay? So step 3, right, what you want to do is you segment your capital into 3 parts. So you have 3 bullets to enter the market. Okay? So for example, right, one company share is $1,000. You allocated before. So now $1,000 divided by these 3 bullets is $300. $333 for one bullet. So step 4, right, you have to use the bullets for every 25% drop of the first buying price. That means, right, for example, ABC shares. Let's say you calculated your intrinsic value is $30 using the VIA calculator. After you factor in the MOS, your first buying price should be $20. Okay? So this is your first bullet. When the stock price drops, right, to $15, you buy again. So that's your second bullet. When the stock price drops by another $5, they enter again at $10.
So this is 25%.
Yes. So it's 25%. Because 25% of $20 is $5, man.
So in other words, 15 and below, you fire your second bullet.
Yes.
Huh? Why we go up? Which one? Why you don't fire?
Yeah, go up, don't fire.
No, you get the idea. But it's a guide, it's a guide.
Yeah, it's only a guide.
Yeah, you see, if Geraint don't tell you a guide, you ask when to fire. 3%, 4%, 10%, so you give you a rough guide. Every 25% drop.
So step 5, right, is to calculate the number of shares you need to own. So you must take the bullet price divided by the current share price. So for example, you take the bullet price, the 333, divided by $20 the current market price. So you have 27 shares. This is to let you know how many shares to own. Because when you buy for example, a Singapore stock, right? You need to put in the number of stocks. So to calculate the number of stocks to buy, you just use this step 5. Okay, then I'll move on to my tricks, how I actually implemented this strategy. Okay, so the first one, right, is this DBS Group Holdings. Yes, so after I bought my ETF, right, I was still hesitant. So I just found a random blue chip company and just look at the financials first. Apply what Cayden used, okay? And then I bought my first stock 2 years ago. Still in the army, only bought 100 stocks. By the time, it's a lot of money already, okay? I bought at $16.
After you bought, the share price drop.
Yes. Anyone know what happened in 2015? China, they devalued their yuan, so they decreased a bit. Then interest rate, right? The US federal hike their interest rate. So everyone thinks the economy is contracting, okay? At the same time, right, oil price start to fall also due to oversupply. So that is what led to the decline in the banks. But then when I bought this, right, because initially the price was at 22, so if it went down, I was quite happy. Then I bought at 16. At that point in time, right, I was quite happy. I told my mom I bought my first stock already. But then after a few days, it started to go down even more and more and more. 16, 15, 14. Well, I'm very scared. Very scared. Until here. I told myself I don't want to buy anymore. Because at that point in time, my portfolio, right, is only $5,000. Yeah, so I allocate very precisely and properly. Okay, so eventually, right, in March, I start to buy again.
You didn't fire the bullet?
This is the bullet. First bullet, second bullet. As you can see, it is not really a 25% drop. It's not really a 25% dip. The 25% is just a guideline. If I want to wait until 25%, I think this one will be like 12, almost $10 already. Which may not happen, because it was $13. So I bought at 14. I was still a bit sad. Okay, so this AP, right, is my average price, so it's $15. So total quantity I own is $200, 200 shares. At the point in time, I was I just started school, so I was still very scared. Yeah. Yes, so I waited. I read a lot of news on why the bank shares fell and why it raised up. Okay, and eventually I sold my first bullet at $18.
Oh, you sold first bullet?
Yeah. Actually, you cannot really count sell first bullet, sell second bullet. Because, right, yeah, average price is 15. Okay, so my realized gain is already 16% already. Yeah, just because I held on during very tough times. After that, I sold at 2017, April. I sold at $19. So, realized gain 21%. So, the reason, I think more importantly, is the reason why I buy and sell. Okay, the reason why I buy, I've told you before, because of the macro outlook. It was terrible, and everyone thought the banks were like falling, because many banks, right, they loan money to oil companies. So when the oil price dropped, right, many oil companies closed down. So everyone thought like the banks, right, will lose money, and they eventually did. They did lose money, but I thought that MAS wouldn't let DBS fall, because there's so many people, all our savings are all inside, correct? Who is DBS here? Most people, right? Okay. So the reason why I sold, right, is because my intrinsic value was around $16 like that. So it was above my intrinsic value already. Then at the same time, I realized that I was afraid that it may go down again, because the oil price wasn't that stabilized yet. And then eventually I sold here at $19 because I felt that the oil price, right, it was still quite uncertain. And I felt that maybe the next quarter, right, the liabilities will increase because of the oil price not going up as fast. Okay. Okay, so my next stock, right, is OCBC. Okay. So I bought one in January 2016. That was right after I bought my DBS. 16, I bought at $8. Again, the reason why I buy is because of the same macro outlook.
So you realize that every time you buy stock, it drops, right?
Yeah.
Yeah, it happened to all of us, and you can. It's like that.
You will never be able to buy at the rock
never
bottom,
be able to buy the bottom.
and you will never be able to sell at the top. So I bought my first 100, then I sold at here, $9. So my realized gain is 10% here. Now, this is my third stock. I bought Dutech Holdings. I bought at the peak. And this was in 2017, where I have a lot of financial knowledge from all the school. Teach me all the valuation method. Wow, I thought I was very smart really. Somehow we did when I was in the SIM Investment Networking Club, right? I did a lot of we had to form into groups to study individual stocks. Then after that present to the seniors, like an analyst like that. So this was the stock that I studied. Then wow, so nice, go up. When I studied, right, it was here only. The stock price was at 0.35. So I waited, then I bought at here. I thought it would go up. Then what happened, right, was that, wow, it dropped all the way, even more. But eventually I buy even more, 800. I bought at 38 cents. So my unrealized loss is 22%, even with all the financial knowledge. Yeah. So it doesn't mean, it doesn't matter how knowledgeable you are, okay? As long as just keep your investment philosophy simple, okay? And apply what you learn. But the reason why I still bought is because I still had some confidence in this company. This company, they make ATMs. And the reason why they dropped, right, is because of the rising steel prices in China. Personally, I'm also not very sure whether I should hold on or sell it off, because steel prices, I don't know how far it will go up. Yeah. Then my last stock is Riverstone Holdings. Okay, this company makes rubber medical gloves. Okay. So I bought one at 0.95, and now it's currently here. So my unrealized gain is 15%. And the reason why I bought, right, is because the financials look very good, and I'm very positive. And the industry itself is very quite stable. Oh yeah, I still have one more stock here. This is my US stock, my first US stock. You know, every stock, right? See? I can only manage to afford 4 only. But, yeah, but it didn't matter because I was more focused on the skill, rather than the money. Cause right, yeah, boy, it's only a bit regret. It went down all the way because of like some drug test failed.
Yeah.
After that, it went up again because I think they acquired some company.
Yeah.
Yeah. So it went down all the way, then went up. So my unrealized gain is okay. I still got gain 4%. But over here, I was like, quite regret it. Just screw it.
Maybe you should announce when you buy. They will wait. Want to wait.
You know, actually, right, this is actually a good sign, because you can never buy at the dip. Usually, how people make money from investing, right, is they buy when the stock price is going down. They buy on the way down and they sell on the way up. Because you'll never be able to sell here and buy here.
Which is why the bullet is necessary.
Yes. Especially if you don't use dollar cost averaging. Okay, so this is my summary. That's 19% here. Only one stock. But I think it's still quite decent. Because over here I got no financial knowledge, only Cayden's knowledge. Yeah. DBS, OCBC. Yeah. My Dutech still losing money, but never mind. Then, yeah, these two. Okay, so these are some recommended books to read. Okay, this one very good. I like this guy, Phil Town. Yeah, you can read Warren Buffett's books. Yeah, basically you read as much as possible, try and learn as fast as possible, and try and apply as fast as possible. Okay? Yeah. Okay, that's all. Thank you.
Now, by the way, I think it's quite humble. I mean, the fact that he just got started, to me, actually this portfolio is considered very good. Now, and we need to realize that once you create a portfolio, we will never have all winners. We will always have one or two losers. But the winners must be able to outshine the losers so that overall is positive. And the way I look at it, I think it's damn good really.
Yeah, for 1 year it's very, very good. And his learning lesson, I think, is quite intelligent and very logical.
And it's quite open. By the way, he doesn't have to share you this. You know, he gives you the exact point, and then he don't feel shy, but I only buy 100 stocks, you know, that kind of thing. It's really very nice. And you're going to give Geraint and all. I really appreciate it. I really expect it. So, any questions? Maybe one question? Then later tea break, you can ask. Yeah, like?
Just one. Because these stocks, even though after you buy it drops, but you collect some dividends along the way, right?
Yes. All these returns, right, are not including dividends. It's just capital gains. I was a little bit foolish because, right, my DBS and OCBC, right, I converted the dividends into actual stocks. So it was very little. So they give me, for example, right, I think DBS gave me about $10. So I converted it into a few stocks. So like about 2 or 3 in 2 or 3 DBS. So it's very hard for me to sell now.
Yeah, a lot.
Yeah. So best is just to just collect the dividends.
Any other things? One last question. Yeah.
No, I don't do options at all. No capital.
One last one.
What's your thought on the trading commission? Because if you're buying several,
Commission.
Okay. First of all, right, initially I wasn't very concerned about the commissions, because I was more focused on the skill. Because if you can make, if you have a capital, right, of $100,000, and I apply the same skill, right, I'm able to make 19% returns on the same 100K. Yeah. So in terms of the commissions, right, I'm using poems. So it is there's a promotional rate, $10.
Now I think it's $5.
$5, yeah.
If the account has money, I think it's $5.
$10 for buy and sell, yeah.
Okay, can we give a Geraint a round of applause again?